Hey guys, I know it's been a while, but I had some turbulent days last week, so apologies for my absence. Today I wanted to talk to you about context and market structure. You know, when you're on social media and people tend to say you have to keep context in mind, but nobody really know what it means. Let's try and explain this a little bit today. We'll dive a little deeper into market structure and how we can visualize a story to find better trade locations so we can build an understanding of the higher structure to ultimately make better short-term decisions. So first off, I wanted to tell you guys because ever since I started this channel, my DMs on Instagram are running over. So I'm working on a place where I can offer faster and more in-depth information through courses and one-on-one training. I will also be posting live trading sessions and much more information, all centralized into one place. This will be easier to navigate than YouTube, but it will cut deeply into my free time, so there will be a small admissions fee to enter. If this is something you guys could use to accelerate your learning and profitability, let me know in the comments. Also, please like, subscribe if you haven't, and hit the notification bell to stay updated on new videos. For now, let's play the intro and start with my usual drawings. Okay guys, so let's talk a little about market structure. So imagine we have in an uptrend, market is making higher lows and higher highs, and it's taking these higher highs out. We can talk about an uptrend. Now the moment the market will take out the higher lows, right here, we can anticipate a market structure shift. Now this is not yet a market structure shift. We can only talk about a market structure shift if the market is effectively making lower highs and lower lows that get taken out on the way down. So what can we now see in this market structure is that in an uptrend, we can put our stops below the lower lows to be safe. And we can target these higher highs every time because they can be taken out. Same thing in the downtrend. We can place our stops right at the lower highs and we can target these lower lows. So how does that look in a real life market? Let's dive in. Okay guys, so this is an ES chart, 15 minutes. Now to read the market structure in ES is quite difficult because as you see, we make a high, we make a new low, this low gets taken out, we make another new low, this low gets taken out eventually, but first we make a new lower high. So this is a low high, this is a lower high, make new lower low, we make a new lower high. So we can say that we're in a downtrend. Here we have some ranging action in this box. Then we make another lower low and lower high, lower lows, lower highs, lower low, lower highs, a lower low, lower high, higher low, higher low. These highs get taken out and we make a new higher high. So here you see market structure explained for a downtrend moving into an uptrend. Now, how do we find entries on this? Well, some people will say you have to feed Fibonacci tool onto these ranges. So that will give us a range of approximately, this will be 10, this will be 80, 30 points to find our entry right here. This is something that I, as a scalper, find very difficult. So what can we do to make this look easier to read and easier for the eyes? We put on a volume profile. Now this one on your right is a composite heat volume profile. I've talked about the volume profile before. It is an excellent tool to see market structure. So the volume profile exists of this high volume nodes right here. High volume nodes are these ones. That signify high levels of market activity, or as we call them, distributions. So what can we look for? I tend to look for gaps. So I will point out this gap right here. You can see it very clearly. I will put it in a circle. Oops. I will put a circle around it. So this is a low volume node, meaning there is no interest in this level. So what can price do if we have no interest in a level? Imagine you have a high volume node, low volume node, and a high volume node. This is your low volume node. If price comes to the low volume node, there's a few things that can happen. One, buyers can start buying, but passive sellers will absorb to push the price down again. The other thing that can happen is that buyers will start buying and there is no passive selling below. We just go through the low volume node back into the next distribution. We'll find a way there. The third thing that can happen, which is most likely, is that price will go there. Buyers or sellers will be positioned inside this distribution. And they will absorb here to keep the price here. But what do we know? The buyers who bought here will try to defend, and we will make a range right here. So the volume profile will close and make it an effective distribution. Remember that the market is always looking for a way to distribute prices on an effective manner. So now what can we see here? So prices moved. I'm going to just change this one into this. So prices have moved from this range here. They're going down, build a new range. As we can see inside this new distribution, we pushed below, we got back up. So we marked out this distribution and this gap right here. The moment we come into this gap, then we can start looking for selling opportunities, because we are in a downtrend. We're not gonna look for buying opportunities until this high right here has been taken out. So we take out this low, take out this low, and we're still looking for shorts until this high has been taken out. Easy as that. This is your story. Sellers are in control. Sellers will remain in control because they're all located right here in this distribution right here. This is where they push the price down. This is the distribution. So if we can get into this gap, we see selling activity coming in. We know we're pushing lower. So this is a beautiful entry. One which you cannot see on this chart alone. If you want it even more clear, we're gonna, okay, now we see this day, we put on a daily volume profile on every day. What do we see now? So we see this top, as we mentioned before. And we get this previous value area. This is this blue line and this blue line. We see the value area low has been taken out before. We come down, take out the value areas here. And we are building new value right here. But we cannot break the old value area high. We are in this gap. Retest. And we pull down. So this is a story we have to tell ourselves when we're looking at the market. So we see this gap here. We know nobody's interested in these prices. So we come up here once. No biggie. We come up here twice. We can break the value area high and we go down. Guys, you know you can use the value areas as support and resistance zones. I already explained this in a previous video. So we can use the value area high and the value area lows as support and resistance zones. Same as we have here. We have here the value area low. Price bounces off on it, goes high, goes into the distribution right here, and we go low again. Now, if this is still too difficult for you to see, there is one way, which is my little secret, to watch market activities, and that is putting on a footprint chart. So, okay, guys, now we have this same chart, same dates in a footprint chart. So what do we see now? We see this range right here. We still have the top right there. We still have this gap. Now we can even adjust this gap a little bit. But it's actually right here, you see? This gap is smaller. Voila. This actually is the gap. So if we run through, this is the data that we're looking for. So now we can see what is happening here. Guys, this is a delta footprint chart. 30 minutes. I will be explaining a little bit what we see here. So what do we see here? We see a lot of buying activity coming up here. We see this big selling delta that is warning us that sellers are trying to keep the price inside of this gap. You see the sellers, but they've been taken out. So price has been pushing higher. We see this buying delta, which means buyers are stepping in. So we're stepping in with the buyers in this gap. We get some buying above, right at the previous value area high, but price cannot stay up. See, get a big red candle going down. Buyers are still trying to win from these sellers, and there's a little fight. Sellers are pushing more down. Sellers are trying to pushing more down and trying to push more down, but they can't keep the price here. Price goes up. Buyers are stepping in again. Buyers keep stepping in, and what happens? Right above the previous value area low, previous value area high, we get this buying, this selling activity. Selling activity continues. Selling activity continues, and we just sell off. We've got some buyers here trying to push prices higher, right at this same zone right here, right at this selling zone, but they can't keep it, so price pushes down. This is actually the kind of story you want to be telling yourself when you're looking at these prices. Now let's see a day like today. we have got a low and higher high, higher low, higher high, higher low, higher high. This is an obvious uptrend. So now today we are taking out this lower low. So what can we expect in the next couple of days? We will be ranging first. See if we can take out this higher high and continue the uptrend. Or if we don't make another higher high, this can be at this value area high, can be this value area low, can be one of these two. But I would suggest keeping an eye on this one right here, which is 50.93.25. Why? Because of what I've told you guys before. We have this gap, we have this entire distribution, we have a gap right here as well. So let's say this could be a valid zone, and we can check, we can roll back, we can check, could this be a valid zone? Right, we have here a value area low, right here, value area low. We have a high that hasn't been broken. We come back with these highs, and here we range a little bit. So we know that this zone is important. So the zones that I would be watching are 50.60 and 50.90 to get us pull more to the downside and take out this lower low, making this a new lower high, entering a downtrend. I'm not saying it's gonna work like that. I'm just saying there's a big possibility that it will work out like that. So let's just zoom in on this day for one second, because I traded it this morning. As you know, I trade the Globex sessions. So how could we know this was a day where the price would be pushing lower? We don't. Because in the morning, we have this nice, balanced volume profile. Like this. It was nicely balanced. See, we have some aggressive buying. I'm going to zoom in. We have some aggressive buying right here. So this is aggressive buying. So we know there's passive sellers trying to smack the price down. Why? Because we're entering a downtrend. So we're looking for sellers to smack the price down. So we are still looking, when we enter 560, when we enter 50.90, we're still looking for those sellers to smack the price down. Once we re-enter this zone, I hope you guys can see it, we start selling off. Start selling off bigger. Buyers are trying to attempt to get there, and we cannot fall back into the zone, and price just continues to the downside, making this a new gap. Let's just point out this new gap. Boom. Let's see what's happening inside this gap, inside our order flow. Now, just for shits and giggles, we see all this negative delta right here. So we can narrow it down a little bit to the high delta places, where we know sellers are heading. Price smackdown. And now, just for fun, I'm gonna go and put this, instead of on a delta chart, I'm gonna put up a bid and ask. Let's see what we have here. we have all these imbalances right here. So this is making me a clear picture that if we revisit this site, what did I say before? 50-60 area. This is where the selling starts. We can make an attempt here. We can range a little bit. But here, sellers have to start defending to push the price back down again into this distribution. Because this is where the action is. You see the difference in colors? This and this. This is the heart of the action. So price can go up. And here, in this area, sellers will need to defend. So this, guys, is kind of the story you want to make yourself. You don't want to be looking at this chart and just saying, oh, it makes higher high, it makes higher low. It's this easy. No, you have to really focus on where the price action is, where the orders are being put in. This is the locations you need to know for yourself. These are the places you need to know where the action is happening. I will show you another one that I just seen right here. Before we smack down, you see this entire red delta. Voila, you see this entire red delta. So what happens in this candle? We have a previous POC. We got a bunch of buyers coming in. Bunch of buyers, but also a bunch of sellers. We start selling off. We see all this imbalances, more imbalances, and then we go up right into the first imbalances right here. We try to buy, we get a big imbalance right here. Sellers make huge delta right here. And when this POC is hit, we just sell off. And all these imbalances mean there's 4 times as many sellers as buyers. So we just push the price down and buyers cannot win anymore. So guys, this is how we can use the volume profile and the footprint to find better trading locations on a larger scale, and really zoom in on the lower scale to find good trading opportunities inside of the low volume nodes where we know the action is going to happen, because inside of the low volume nodes is where the buyers or the sellers are going to defend their positions to get the distributions working. So I have to look inside of the low volume nodes to see if buyers or sellers are defending their positions. And we know about the passive buyers and the passive sellers. So if we come up and we get a lot of buying activity right before the gap, then we probably can know there's a lot of passive sellers above. So we have to tell ourselves the story. We have to tell ourselves, what do we see in the footprint and how do we as traders react to it? Now, on the shorter term, there is also a lot of strategies that we can use to see the activities inside or even before the gap to really narrow down that footprint into a more structured approach. But that's something for another video. So stay tuned for next week's episode, where we will go a little bit deeper into the shorter term. We will introduce the DOM and time and sales to make better decisions, to see where the active and the passive buyers are interacting at these locations where I just talked about. Stay tuned, hit the notification bell, leave me a comment, and I'll see you guys next week. Bye.